Good morning, everybody. 10:38 a.m. Pacific Standard Time, the date 3/9 of 2014. What do we have before us? We have Priceline, PCLN. That has been one of the best trading stocks in this whole market. And what do I mean? This thing here, we had a pullback. I'm going to show you where it was. In calendar 2014, we put a bottom in on Priceline at 1,103. All right, that was your calendar 2014 low, but this particular high that we got into on 122 when the month of January was not very favorable to stocks, of course. The open was 1,207, the high was 214, and the low was 1.204. But then we had that big pullback here. And every nice pullback that we get an extreme rally. And this is a diagonal trend line, and we're right up here. That's a 10-day simple moving average, and that's a 20. Now, what I'm going to do is take out this trend line there so that you have a good view of what we're saying. We're just going to take this part of the 2014. It started up here. We're at all-time record highs, and we closed at 1358 on the last trading day going into this weekend. And that close was 1358. The high was 1378 right here on this calendar day, which was 3/6. That's your high, 1,378. Okay, now this high here is lower, but not by much. That high is 13,373, and the low that day was 1354 with the close at 1358. Now, from 1379 to a reversal of 1358.04 is what we're going to be looking at. I got that 10-day simple moving average right here. It's a daily chart, okay? Now that's at 1353. The 20-day simple moving average at 1306. Let us not forget that the 20-day is the key. That is the wall of support at the moment, because every time we got to the 20-day simple moving average, we had great breakouts. Now, having said that, we are going to take a look at the contracts called call side, put side, inflated versus deflated, and where we can get our entries. And not only that, everything that you would like to be, well, you're not, but you can get here and get with us, and you can be, to be or not to be. This is what we do. We have the Priceline March regular monthly expiration, a 1375 call that was in the money with a high of 3288 and a low of 1890. Then when Priceline had that volatility in the pullback, they opened at 1180, the high was 1650, and they closed on 3/3 at 1410. And so we can see here in the whole call structure, this is a 1375 call chart. We know you've never seen one. Hardly anyone ever does. But guess what? They love to trade options and don't even have a foundation behind it. Now, back to a monthly chart so people can clearly see this big bull run. Remember, the 5-year anniversary is upon us in the broader market, and this looks identical. 2009 lows, 2010, and these are all monthly. 2011, look at these monthly in a yearly format here. Look at the 2012 consolidations, and where did they break out? They broke out big time in 2013. And when we got up above this trend line here, because one of the things that we want to show on Priceline is going back here to 1999 when it was $1,100 stock, and it was, and it's right here in front of you and in front of me and everyone else. You know, that was a different time period, of course. But here are all the yearly lows in Priceline, and we are extremely overbought in Priceline right now. 2009, 10, 11, 12, and 13. And let's just take a look at that big rally with the monthly consolidation and a breakout to these highs right here that I'm going to show you. And here is where it was. It was exactly right there was a monthly top. And we have on a monthly level, we are overbought on Priceline in the shorter time frame. And that 13, let's take a look at that high right here. That high was, we all know it, that was 1378. So we had a nice little pullback, but we're overbought on Priceline. The 10-month moving average is rising. The 20-month moving average is coming into play. It's rising. This is one of the best bull runs ever that Priceline has had in history. So therefore, when we get back into the options, we're looking at 1350 put. We're looking at the 1350 call. 1375 put and call is in the, well, let's just take a look at it. The 1375 call is out of the money, but the 1375 put is in the money. Yes, it is. And we're going to take a look down here at, once again, 1345 call and put ratio. And trading the options is how you can trade Priceline with a whole lot less dollar risk, as if you were paying for the intraday trade at 1,358. Well, that costs an awful lot of money. But we're going to show you how you can participate at a lower cost dollar level in directional price movements with Priceline. Okay, we discovered here was a 1345 put on Priceline. Now, 1345 put on Priceline on 2-1, and this is just a monthly view of that put side of Priceline. And that put side opened at 146.9. The high was 147. But you know what the monthly low was here? $20.80. If you had puts on Priceline, they actually had a value of $147 a contract. Now, as a market maker and wanting to be in Priceline, is we get to do it at where the low on this calendar month. And remember, we're only a week and a good trading side of the month. The low was 1522. And the monthly high so far in January was 41.5. And yes, we showed you where Priceline had closed on a closing level in this very video. Now, having said that, we're very happy to show you again the in the money 1345 call. And yes, that call option, the reason why it's not looking like the 1345 put was because Priceline had rallied extremely hard. And once again, we're willing to show you the Priceline trade right here. PCLN, we're going to go back here to the daily now, and we're going to get the actual ranges. So this is a top right here in Priceline. That 1345 put, you got to know that 1358 was the close and 1373 was a high. So we're going to trade the March contract and get great entries that in the short term, this particular call is up here at its all-time highs, even with the equity side pulling back, because this was out of the money. When we were trading up higher, we were in the money. But right now, we're still in the money, but about what? $13 difference in the strike prices, because that's the reality. And once again, we're going to put that call right back in here. There it is. You were just seeing the equity. There's the high. And knowing how to trade Priceline, get set up, and you can trade this big bellwether by using the proper entries on the call side and or the put side. Get with it now. We have before us right now a put side contract. The 1340 put, which is currently below where Priceline closed, as you all know, and that low was 1680. So you open at 1680, you got 1748 on the high, and that low was 1680, and the final print with the volume of 23 contracts traded. These are very illiquid options, and you know what? We're going to be able to make our market with an illiquid option, and we're going to be in control on the bid getting hit and then selling and offering out on the ask. So this is a very good way of using this particular structure. Now, one of the things that we're also going to look at is a 1330 put, which is well below the floor. It's $20 out of the money or so forth, about $28. But here's the all-time low. And when you're going to trade this thing, you can trade them intraday and be in charge of how to get the entry, because most people don't. And we'll show this entry tomorrow morning. That low was $11 on that put. That's a 1330. That is the low. The next, our Friday session, so the low was $13.70 and the high was $14. Now, this is deflated, no doubt about it. And there's 10 days to trade it, and we will. Once again, it's how I get my entries at what? The wholesale price. Let's do the following. Look at the 1340 call up here. It's inflated. It peaked on the high of, on 3.5. It was at 45.72. This particular pullback, that contract high was 41.6, but guess what? The low was 34.40. And so it was in the money. And when we get a pullback, the in the money, which is the 1340, we've already gone over the other side of it. I'm going to go back to you seeing here the differences between this and this. This is a big difference. And you know what? It's only a $10 difference from 1340 that I was just showing you. Now look at the low over here of $11. Now that's a $10 lower strike price, but these can be traded intraday. I mean, my goodness sakes, they were up there at $32 and they were inflated. We all know it, but now we hit the low here. We will make a market on an illiquid option trade. We'll do it on Monday morning, and we'll have a follow-up with you to show you how to get that entry, and you could be the only person trading the volume. Get hit wholesale on the bottom and offer out higher on the ask. We'll see you tomorrow.